Today, we're going to focus on the one big beautiful bill that passed last year.
Yeah.
It kind of at the time there was a lot of discussion about it. Now we're getting close to tax time, and it's
Right.
got implications long term for estate planning, as well as some of the tax
Yeah.
issues as people file this year. So, talk a little bit about some of the maybe unknown items in the one big beautiful bill, or for those out there watching,
Yeah.
what are some things they need to be aware of from a tax
Well, I
standpoint?
think from a tax perspective, right, that first of all, there's a lot going on in in that bill. One thing from our perspective that I think is really, really important, and this has to do with estate planning.
Hmm.
And when we talk about estate planning, right, everybody thinks of kind of the death tax,
Yep.
and the death tax is applicable.
Easiest people to tax because they can't vote.
They can't vote,
They
right?
can't
They
vote.
can't vote. I think a lot of times people forget that that's even an issue. And
Mhm.
what we're talking about here is any dollar amount, asset value over and above whatever exemption exists at the time that you die is taxed right now at a 40% rate.
Right.
So it's a moving target throughout history
Because
for
it
planning.
changes
It
often. And
changes
so for
often.
what people need to understand is Congress changes the
That's
estate
right.
tax exemption pretty often.
Yeah, if we knew when we were going to die, we could plan a lot
Correct.
better. But here's what's really interesting. What's really interesting is that with the one big beautiful bill, it's solidified, at least for the time being here, one of the largest exemptions that we've seen in a long, long time, which is at
Yeah.
15 million per individual. So a married couple, that's 30
30
million
million.
dollars.
It's a big deal.
Anything over and above that, sure, be taxed at 40%. So as we start to look at it, we have a wonderful opportunity for individuals, families who have assets that again are likely going to accumulate over a period of time to begin to move that out of their estate today because they got this huge exemption and let those assets continue to grow. So we've got a window where we can actually move assets out to a large extent and remove that to really mitigate estate taxes in the growing future.
And in addition to the bill, which is unique, is they also indexed the exemption to inflation as it's moving
That's right.
forward. And
That's
so it's not just pegged at 15. Now it's got a target
Yep.
to where as inflation comes out, they're going to move the exemption
That's
up
right.
year over year, which I think is a really big deal.
It is. Now, now we're kind of talking about high net worth affluent families. Now,
Right.
one thing that also was impactful here, and this is maybe more for the middle market, is the SALT cap.
Yep.
Okay, so state, right?
State
Yep.
and local
That-
taxes.
that's exactly
Yep.
right. So we get a deduction for those taxes off our federal income. And before in 2024, that was 10,000. That was capped.
Yep.
Now we've got a cap at 40,000. Now it phases out once you get an AGI, adjusted gross income, over 500,000. So again, for high income, it starts to phase out. But again, for kind of middle market, upper middle market, that's a huge incentive
Yes.
and a huge deduction that otherwise didn't exist.
100%. There's a lot more
There is
in
a
that
lot more.
bill,
There's a lot
more
more.
than we can get through in
That's
this
right.
small
That's
segment.
right.
But if you'd like to learn more, check us out at prevailiws.com.